Hi there, thanks for joining. I've not been on the channel in quite some time. Last time I did some videos, I was doing some live trading and had just passed a Leeloo evaluation and ended up blowing up my performance account. Um, anyways, it's been a few months. So as you can see by my charts, this chart maybe looks similar. I've changed a lot about the way that I've been trading, and I feel comfortable enough now to start to share that again. I don't know if and when I may do live trading again. Um, I'm considering maybe doing it once I get better internet and doing a live stream so that I don't have to worry about my recording. And I just found that I had too much going on, and it played with the psychological side that obviously we all know as traders how difficult that can be. So what I've decided to do is do a daily recap of my trades. So it's November 29th, but I'm going to start do one or two today, and this is going to be the November 22nd uh, trading recap. So um, just one trade, and what I'm doing is trading three contracts on the micro NASDAQ, and I've built myself a really complex spreadsheet that tracks my trade performance, and it has nothing to do with money. It obviously equates to money at the end of the day, but it's based on a risk to reward ratio. Um, I look at win percentage. I look at ticks per day per contract. So to keep me away from scalping too much, and I'm trying to push for some bigger trades. I've been trading like this since the beginning of August, well, the end of July, but call it the beginning of August, and started with one contract and moved to two. Now I'm up to three, and it appears, as long as I don't have a disaster tomorrow on the last day of November, I will I will actually far exceed all of my minimum criteria for the month to go up a contract. So that's the way that I'm operating. It has nothing to do with how much money is in my account. If I meet my criteria for the month, I get to add a contract the following month. If I don't, then I just stay where I am. I don't go backwards. So this month I had a great month. I'll be going to four contracts, and then I haven't decided if I'm going to run four targets or three. Um, Generally, my setup is 45 ticks to target one. Generally, 60 ticks to target two. Sometimes I will stretch that out. And then 100 plus ticks for target three. Um, if I don't feel there's 100 ticks in the trade, I don't enter it. I might see a really nice scalp where there's, 10 points, 40 ticks, or whatever. I just don't take them. The NQ moves so much that I know I'm going to get one or two trades in a day, and that's all I need to do what I'm trying to achieve. I'm trying to be consistent, and I like my win percentage to be over 60 or 70, and then my risk to reward ratio to be above 1.5, and then I want my ticks per contract per day to be over 20. So ticks per day per contract would be like if you took one trade and you hit, say, target one was 45 and target two was 60 and target three was 100, that'd be 205 ticks. But if you divide that by three, that average was 68. So you got 68 ticks per contract. And so my goal is 20 ticks per contract per day, which seems super simple. But sometimes my stop is 60 ticks and three contracts. So I'm 180 ticks loss on a trade or 60 ticks per contract for a loss. So 20 seemed really small, but once I started doing the math, it actually works out to be a great number. So, anyways, it's a little bit about that side of it. Chart wise, I'm down to two charts. This is supposed to be a um, 5-minute chart though. I peek at a 15-minute chart and I peek at a day chart. I peek at a day chart to, yeah, I mean, I keep thinking we're gonna have a bigger drop, maybe back to this trend line, but it's followed a really nice trend line through this last few months. So I do run a day chart. I peek at a 15-minute chart, and of course I marked all of this up on the wrong chart. And I focus mostly on a 5-minute chart while I'm trading. So for the purpose of this one, because I've already marked it up, I'm going to stay on the 15-minute chart. I might just expand it a little bit. I do run a 20 and a 100 moving average. Yeah, 20 and a 100. And then RSI on my, again, this is, I marked it up on the 15, meant to mark it up on the 5. But that's why this looks so small. Anyways, I use my minute chart. Again, 5-minute chart is what I look at when I'm trading to mark out a few things. But the biggest thing I'm looking for is to help me understand where the market's going. You'll see the thick blue lines and the thinner blue lines. The thinner blue lines, I'm just marking out the 20s. I find that every time you see 20 in the market, it's a natural support and resistance. A lot of times, sometimes it's not. And then the thicker blue line is where I see long-term support and resistance from uh, previous pivots, or this must be from something forward of that. Anyways, you'll see it come up in other trades when I explain a little bit more. So for this particular trade, the close of this in reality 15-minute bar, but in if I was showing you this on the 5-minute, and I guess I could just scroll back to, I don't know if I have enough days loaded here. Oh yeah, I do. Let's just go to November 22nd at 10 a.m. There we go. Okay, so you can see here, that looks a little bit better. So this blue line lines up with this blue line. So market opened here, nice push up, good bull finish. Next bar, great bull bar, another good bull bar, another good bull bar. Market slows down, has a little conversation, kind of a range bar. Then we get a bear bar, so a little pullback, and then we get another really nice bull bar, followed by a doji bar, kind of a range bar. Not, I mean, it technically finished bearish, but what I'm getting at here is really nice bull run to start, and then the market really slows down, which is starting to tell me that there's a potential for a retracement, a pullback. I'll tell you right now that this is not what I expected to happen, but I was expecting some sort of good retracement. So my thought was whether you run the fib from, the bottom of the morning push, or from kind of this pivot area where the market kind of sat all night. Let's just run it from the opening of the market up to the top here. I find that on the NASDAQ probably the most common retracement's 50, but somewhere between 38 and 50. So then I use my tick chart. This is a 10 tick chart. I like to use it to really dial in my entry. I try to use as small stops as I can, but when I'm using these bar charts, I mean, you need to be setting your stop above or below, major support and resistance. So what I've really noticed in the market, and I use an order flow cumulative delta indicator, and it's basically just a divergence indicator. There's lots of them. It's whatever your eyeball likes. The other thing over here is RSI is way oversold. So looking for a pullback. Again, I was not looking for this massive major trend reversal. I was just looking for a pullback. So I've really been looking for 3 pivots with divergence. Now, I am starting this one with probably the least common setup, but it is what it is. I'm just going through last week, and the other trades might look a little more simpler. But essentially, this is where the pivot starts. And so how I do it is, if this was live, I see a pivot in the market, which there's lots of them obviously on the 10 tick chart. I'm looking for a drop. I don't want to see too big of a drop, but this is a really substantial drop. And then I'm looking for a pullback that doesn't, so this ideally was the one I was looking for. And then I draw a second dot. And what I notice is from this pivot to this pivot, the price is essentially the same, within a half a point. But my order flow indicator is diverging down. So that's telling me to look for a short trade. Now, this is what I just call the false breakout, which if you listen to any of the experts, this happens on the NASDAQ all the time. It's the market that I look at 99% of the time. So it's the one I'm comfortable with its personality. So I'm thinking to myself, okay, false breakout. There was too much weakness at the top here. And this last little leg up, there's too much weakness. I'm thinking pullback. And I'm thinking somewhere between 38 and 61%. So I'm not going to enter up here because I want confirmation. And we ended up getting the higher high, same as we did here. So now I see another pivot here, and it is below, right? This pivot here is right here. So it is below this pivot. And again, this pivot, and this pivot are all at the same price, yet these two are diverging. So that makes me feel good. Again, this I'm just considering false breakout. It's noise that I'm ignoring. Then I'm looking again, and I get another pullback to here. Again, this pivot here is lower than this pivot here, divergence. So for me, it was just for looking for an entry. So I waited for another little pullback, not a pullback to test the pivot, but just a pullback. Ideally, I would have entered back through here. And now you'll see some lines appear if I draw them over here. But this is the 50% target right there. So that's kind of where I'm choosing to ultimately, that's where I would like to take the trade to. And is that 100 ticks? Yeah, 149 ticks, which is like, well, 100 and whatever that is. Divide that by 4 and you'll get points. Oh, and where do I set my stop? Very important. So I'm setting my stop here. Why there? Because this was a false breakout. The pivot line is here. So I like to give it a little bit of room, and maybe I'm being a little, maybe it's more like that. I feel like you need to give this thing, what's that, 12 ticks? Uh, Something like that. I mean, I'm not all that crazy about where I put my stop. I want it above the pivot. Again, I don't consider this the pivot because I consider it the false breakout. So somewhere above this, because you might get one that goes a little higher, and I don't want to get taken out by 2 ticks on a trade that's clearly working. So now I'm just going to monitor, and what I really start to monitor is this. And I'll keep extending this trend line that I've drawn, the diverging trend line. And as long as we're staying below it, I feel good about the trade. So target one's probably going to be at 45 because it almost always is for me. And you see how it's getting pretty choppy through here? It's staying underneath my diverging trend line. So I still feel fine about it. This one might actually get above. Okay, is that 45? It's probably 45 ticks. Just like 11 points. I have mine in ticks. Yeah, it was 45. Next one is 60 usually. Let's see what I did at 60. Now I'm curious to see if I just left it alone. When I enter a trade, my targets are 45, 60, and 100, and then I adjust them as I go. Okay, so I did move that one. Why did I move it to there? 20 is a natural support and resistance in the market, and I felt confident about the direction, so I clearly moved it from 60 to 82. And then look at the drop off selling here. So again, I felt really comfortable about this. And now I'm going to take and adjust my trend line a little bit to line it up with the last pivot before it really dropped. So I'm missing these two, but huge drop off here. Now, this is the 50% retracement. That's right here. So I'm pretty sure that's where I held this to. Um, I try really hard not to get greedy. Yeah, there we go. So I set it just above. I try not to get greedy. I have considered, like, literally, why don't I watch this and just follow the trend line? I could make a new trend line on this fallout and draw it something like this, and then just go, well, when I break that, I'll get out. And if I waited for that, that's where I would have exited the trade right there. So, I mean, yeah, I could have gotten greedy and got a few more, but I don't want that extra anxiety. I felt good about this because this was a 50% retracement. I do a lot of I do a lot of looking back and studying on the NQ. I find that when we have a good bullish push in the morning or bearish push in the morning, we're likely, if it's going to be an all day push up, I find that it happens in one, two, or three legs, and I was just shorting what I thought was going to be a pullback. So most common place for a pullback, 50%. That's what I find anyways. Some are 38, I would say 50, then 61, then 38 as far as where we like to retrace before we push back up. And then if the market tells me it's slowing down, get out. I mean, I got in somewhere back here and these bars were not strong, hence this sideways action. Right? It took me 24 minutes to get 46 ticks, and it took me 3 more minutes to double that. And then, as you can probably imagine, the last bit of this was, yeah, this was seconds from here to here. So I got the majority of my trade in seconds, but it took me 20 minutes to get the first little bit of my trade, and that was what was going on through here. So good finish, good finish. Yeah, in reality, I could have held this thing, but in hindsight, we'd all be millionaires. So, anyways, that's my trade. That's the trade that I've been targeting. Um, this leads the direction for me. And then I just look for solid support. I'll show you on another video how I identify these um, major support areas. And then, like on the push up here, I wanted to get long through here, and I wanted to go long to right here. And the reason why was I had this trend line from quite a ways back, and it was following it nicely, so I thought this would be a good target. Up to that trend line meets an old major pivot area. It was a great target. I couldn't find an entry. And if I did have an entry, I probably was going to have a massive stop because I would have wanted to get in. My stop I would have wanted it down here below this bar, and I probably didn't feel good. I mean, I never trade within the first bar of the market, so maybe somewhere through here. Well, 180 tick stop, not happening. I'm not taking that kind of risk. This, I guarantee, was a big stop for me. I like 60. This was probably 80, 85. That's a way bigger stop than I'm comfortable with. Well, I shouldn't say way bigger. It's bigger than I'm comfortable with. So for me, I like 60 ticks. Again, 60 ticks. If I take a stop with three contracts, I'm losing 180 ticks. If I win this trade, I make 140 plus 82 plus 45, 267 divided by 180. You know, my risk to reward is only 1.5. However, in reality, my risk on this trade was only actually 40 ticks. So 120 was, you know, in reality what my risk was. Uh, uh, what was that? 82 plus 45 divided by 120, 2.2. That's more how I like to see. The other thing is once I hit target 2, at some point in this trade, I move my stop down to here. And I probably even moved to plus break even at some point in that trade. So the risk wasn't always there, but that was, at the end of the day, I had an 80 tick stop. So initial risk. And yeah, that's been my setup. So this trade worked. We'll go through it, but I think I took 7 trades, 6 winners. I believe they were all shorts. and I did have the longest trade of my career, which was almost 100 points, 330 ticks or something like that. It's awesome and fairly quick, but same setup. So yeah, that was it for November 22nd. I will probably post one every day or two every day until I'm caught up, and then I'm just going to post my trades. And I mean, I'm going to post what I did that day. So, for example, today is actually November 29th. I'm posting my trade from November 22nd. When you get to the 29th, you're going to think, what are you doing? Because I took two stops today, and that was my day. And I'll explain why. I think they were one was okay. My second trade I'm okay with. My first trade was just I think I'd taken so many shorts in a row and the market had been down for so many days in a row that my brain defaulted to short trades. And yeah, I entered two shorts today, got stopped twice, again today being November 29th. Today I'm reviewing December 22nd. So in my next video, I will review my trade or trades from November 23rd. Anyways, I appreciate you tuning in. Please hit the like button and the subscribe button. Do me a favor if you will, and hopefully you can learn something from this. I've learned a ton from YouTube. I appreciate a lot of the YouTubers that have taught me some trading, so I'm hoping to pass that on and pay it forward. Have a great day.